Ajay, if you can, kickstart and tell us what should we look out for future trends. I mean, what technology we should see, especially from, since you dealt with a lot in the retail space. What are new emerging areas that you think are coming up and people should be aware of and a solution for? Yeah.
Thank you. Since the topic of this session is digital transformation of NBFCs, I'll take a little macro view first. If we can just dwell upon, we all know the sentence that the banks would lend you the money only if you prove it to them that you don't need the money. And why they have been so stern, or why the banks have been the way they have been, is because of one fundamental reason. The way I sense it is because of the economies of scale. But in my opinion, today's time, we are at an inflection point of technology, and the banking industry is going to be disrupted. People would need banking, but that doesn't mean they would need the banks in the current form that they are in. And why I'm saying what I'm saying? If we really look at 3 or 4 critical segments now, or data points now, or the emerging trends now, the first one is that we all see the oceans of data coming in from all sources. In the BC and DC, after COVID world, before COVID and after COVID. After COVID world, there is an explosion of data. Transactional data is available, high frequency data is available. That's on one part. Second emerging trend is that earlier we used to write codes in C++ or Java because the humans had to learn the language of the machines. Now, with ChatGPT kind of tools coming in, the machines have learned the language of the human. That's a second mega trend. And the third mega trend, if we see, which is the extremely efficient computing power that is available. Now, if we club all three together, that's where I think that the transformation phase has come in for the NBFCs. And economies of scale, which used to be the competitive advantage for the banks, is going to be disrupted, and economies of customer experience is going to be the mantra going forward. So these are the transformational time for NBFCs. Now, how do these dots get connected? If we take an overview of how these dots get connected and what does it mean to the NBFCs. The first one is, now if we see that earlier, what did the banks do, or what are the typical NBFCs doing? They had a fully integrated solution. That means right from product structuring to product promotion to underwriting to recovery to operations to billing and servicing, everything was an integrated solution. But given the highly accelerated disruptions coming in on the technology front, that model is disrupted in my opinion. Like whenever a car is to be built, we see an assembly line kind of an approach. Same thing is going to happen in the financial services industry, and that's where NBFCs are going to rule. Why? Because they can then create. So how would these 3 dots connect, and how would the evolved model look like based on the trends which are emerging now? In my opinion, it would be an NBFC would be an integrator of various tech solutions that are available. So for example, for any lending organization like HDFC, Credila has been, any lenders like that, what are the supply chain components or the elements that they are going to need? One is sourcing. Now, given the fact that the ChatGPT kind of tools are not just coming in, but they have been getting obsolete in a matter of a few weeks. It is impossible for an NBFC or a bank to keep pace with those disruptive technologies. So the only way to deal with that, and that is a golden era for the tech startups like many of them prevail here and in the audience also, the golden era is going to start. Why? Because you could be specialized into a sub-segment of the supply chain of loan origination process, and everyone would need you. So it's like an assembly line approach. Whoever is good in CIBIL scoring, CIBIL analysis, whoever is good in account aggregator to analyze all the bank data, whoever is good at analytics for underwriting, whoever has the best APIs to make decisions, whoever has the best predictive analytics for probability of default assessment, those can be integrated into a component. Now, what would that mean on a larger scale? That would mean embedded finance. as Ms. Rakia has said. So embedded finance would be the mantra. And if we add another layer to that, so how would the macro level look like for the industry? The good news is that RBI has recently launched a platform called Unified Lending Interface. Unified Lending Interface. What does it do? It is like same assembly line. It has a platform where multiple APIs are coming in, and which APIs are already live there, which is actually the best news in my opinion, and that's where India, in my opinion, can lead the rest of the world in financial services. Thus, unified lending interface that the RBI has rolled out in the pilot phase now, it has land records data, it has GSTN data, it has milk pouring insights also, satellite data of all the geographies, it has authentication and verification like eKYC, PAN validation, it has account aggregators, DigiLocker, even housing history. Now just think about it. If we are able to connect the dots, then the lender's job or the NBFC job is to develop deep domain expertise. Like for example, Shriram Finance. On the used truck finance, they are the king. HDFC Credila, which my brother Anil and I founded. It was India's first dedicated student loan company way back in 2007 when we founded it. Today, not only it is the largest private education loan lender, but it has a balance sheet of 41,000 crore. Why this happened? Why even HDFC, our parent, they could do 6 lakh crore only on housing loan? Because then this trend is now going to reflect in a different way. They had the domain expertise. Credila did only one thing and one thing better than others. Shriram did the same thing for a different segment. HDFC Limited did the same thing for mortgages. If we remain focused on our domain expertise, then economies of scale would not matter. It would be economies of customer experience who would have absorbed the model of an assembly line approach where your supply chain partners, the elements which are getting integrated into your solution, would be the tech startups. Even if one gets disrupted, another would come in and would do that sub-segment of your loan origination process. That's how I think I see it, and therefore, in my opinion, the transformation is going to be true for NBFCs, and the golden era for the tech startups and the NBFC sector is about to happen.
Thank you so much for that. You just summarized very well a lot of aspects and what we all should look forward to. But I'll now open the floor for questions that the audience might have for our esteemed panelists here.
Hello. Good afternoon. First of all, thanks to all the panelists for sharing your insightful thoughts. Myself, Pawan Goyal. My question is open to everyone that when we look at NBFCs, they are actually, I will say, somewhere doing the same business as what banks were doing earlier. But they have brought a lot of process efficiency, customer experience and all. But slowly, banks are also trying to improve on their processes and all. So somewhere the competition remains between NBFCs and the bank. What are the specific strategic ways, and probably data analytics could be one of that, which you think that NBFCs can take to remain competitive to the banks and probably keep on growing their business in the future while banks keep on doing whatever they are doing?
See, if I can just take the first one or two sentences, might be a little controversial, but in my opinion, the perceived threat of the banks for the NBFCs need not be in our mind and should not exist. The only reason is if we look at unrelated industries and if we try to extrapolate those learnings, if we see the automobile industry, now the EV, electrical vehicle, that concept has been there, the technology has been there. But it took a Tesla, a monoline, a specialist to come in and capture the market where all automobile sector put together, their market capitalization has been less than only one company. The incumbent or the startup, that mindset can kill anybody. In my opinion, therefore, if NBFCs have to remain relevant or be future ready, they need not go wide, but they need to go deep into the expertise that they have and continue to reinvent and reorient based on the target segment that they are focusing on. Just use different digital tools, in my opinion.
Hello. So, Mr. Bohra, actually, this question is to you only. I mean, very rightly articulated about the one. What is the need of the day about in NBFC, that if the startups and tech firms and come up, actually connect the dots, what you are talking about, then like assembly line. Actually, fortunately, I have a couple of good experience in NBFC data analytics part. I mean, I work for Tata Capital and all. And also civil scoring and all those things, traditional AI/ML part. But my question is that, question to you, that when you're talking about, you know, each of you, I mean, whether it's Sriram Finance or HDFC, Credila, you have some expertise in your own domain. And that's why you are existing, I mean, separately, uniquely. And that's why at the end of the day, your path is different. Okay. Now, keeping that in mind, now, is that it will be a generic product like ERP came in after a couple of decades, you know, that where actually best practices are actually embedded into the system and actually everybody is using it. And the other business fixed effects actually impacts on their path later on. Okay. But at this juncture, when you are talking about a startup coming to make an assembly line, is it, I mean, if you are thinking it's a future of it, or, you know, it is now itself actually people can. Because if I talk to all Godrej, Shriram and HDFC Credila, probably I can get the best of all. Okay, so that's the question.
So, in my opinion, see, if we look at ERP model as an example, in a steady state kind of a business environment, one can count on one platform which can fit into various industries. But unfortunately, the half-life period of any product or service or any technology is shrinking. That means earlier it took them decades to get obsolete. Now it has gone down to a few weeks. Like if we see DeepSeek versus ChatGPT and many others, there are so many examples. Therefore, the concept that we just discussed, the time has already come in and it's already too late, in my opinion. The reason being, the tsunami or the pace of change is so drastic that we cannot have an option to have integrated solution. The response time has to be a few days or a few weeks before somebody else comes in and disrupts. But second, the last point I want to make is, I have conviction in saying this, that gone are the days when a generalist can survive. It is a highly specialized world because the requirements of the customers are getting segmented. And therefore, fragmentation of industries and products are the new trends which are coming in, and any business model or a value proposition which is generalistic may not connect with the digital native population or the target segment that India offers, where the median age is only 29 for India.
You answered me.
And the youngest one. Thank you. Can I just add something quick?
Yeah.
So just like as Mr. Prashant was saying about domain-specific nuances or micro-innovations that they have done, if I can quote about some of our learnings at HDFC Credila, we have been giving education loan to students for their studies abroad. So a simple thing like whenever they applied for the US universities, they needed proof of funds before they could get I-20. Now the traditional process of the bank has been that you need admissions letter before they could even look at you for loan process. So it was a chicken or egg syndrome. They would not get the admission letter unless an I-20 unless they show proof of funds. So therefore it was a pain point. So Credila gave them pre-approved loan. Second, they could not do, they did not have security, most of the students, but they were very deserving students. So Credila offered unsecured loans. Another issue, the last one is, like there are many such nuances or micro innovations which a monoline player can do, and therefore they could scale up and blitz scale before the expiry date of the opportunity. It happens like these students, what we found out was, in a short span of time, they had multiple things to do. They were short of time. So we just customized education loan and delivered it at their home. So if we hyper customize those loans, I think that also enabled Credila's growth to becoming the largest private education loan lender, despite the public sector competition having 50 lakh crore of balance sheet, only one of them. the largest one as we know. So that's the power of an incumbent monoline specialized player of NBFC.